Next up, we're having an interview with Tarek Dajani. For those of you that don't know, Cleartag is a digital agency in Lebanon. It's been established for a long time now and recently got majority acquired by JWT. This is a big indicate of the growth of the market and the maturity of the talent that's in it. I'd like to welcome Tarek Dajani and Omar on stage for the interview.
Hello, everyone, and thanks for joining us for this discussion. It's my privilege to be doing this interview. I met Tarek many years ago when I was just starting Arabnet, and you know what? He had already been in this business for a long time. In fact, if we think about it, as far as I remember, Cleartag was founded about 2000, and so 15 years in the lifetime of the technology industry is like a lifetime. And so it's exciting to be doing this interview, especially that today Cleartag was acquired by JWT, which is a success story for the Lebanese market. And I'm going to dive right in. Tarek, tell us a little bit about the story of starting Cleartag.
It seems like a story of an old company. Yes, technology, 15 years as a journey. I guess it started like any company or any startup where you are not really sure what you want to do, but you know that this is a space that you're excited about. I didn't have a preset plan, didn't have an explicit kind of business model. At the time, in 2000, it was more the euphoria of being in tech, being in a space that's still taking shape. And I guess I just one day decided to quit my job as an architect and jump into this kind of a big unknown of starting initially an animation company. It was a 3D animation company. And one thing led to another, then you became a web company, then you became a tech company, and so on and so forth.
And why did you make all these different changes? How did you respond to the different client circumstances or market conditions?
Well, initially I started a service company. So when you're in a service business, you are following the revenue. You need to pay the bills, you need to grow, and you respond to whatever clients want. And then it was initially web. At the time, convincing clients to adopt to build a website was like telling them jump into this unknown of science fiction. But we were primarily driven by chasing revenue. I know this sounds like a bit opportunistic, but frankly, that's what you do when you're starting.
How did you get your first customer? Who was your first customer? Do you remember?
Yeah, I remember.
Tell us that story.
It was a friend, a toy market. So it was a $350 job.
$350?
Yeah, and it probably took a good month and a half of ongoing work. At the time, for us, it was like a great thing, great opportunity. And it was. And for the client, it was a leap of faith in trying out a few guys, and it worked out. But it's a fun project. It's a fun thing to start off with, and it was an interesting experience.
Okay, great. So now we're talking about here. We started with a team of a couple of guys, two people.
It was me and my partner. We were three. Initially, it was me. Then there was Maya Aranouh, and then there's Lena Merhej. The three of us started working, each kind of tinkering a bit. Then Lena left, and Maya and I continued growing the business.
And so, and it eventually got quite big, right? So as a caveat here for our conversation, I chatted with Tarek earlier, and he gave me all the red lines that we can't talk about. So if you're waiting to hear about what the valuation of the acquisition was, we're not going to talk about it. And the specifics of the numbers, we're not going to talk about. But we could talk about other things. They're going to be very interesting as well. So you grew the company to a sizable staff, right, with operations in multiple markets. You have clients in Dubai. Do you have clients outside of the UAE and other Arab markets, KSA?
Yeah, we have clients pretty much in the whole region. We even had clients, and still every now and then have clients even beyond the region. At some point in 2003 and 2004, we even had a big part of our business coming from the US. And so we never really looked at Lebanon as a market or the region as a market. We were in a specific field. We operated in it. We had expertise, and we followed any opportunity when it comes to software, digital, web marketing, online marketing, and so on.
Great. So you've now expanded. You have these clients in multiple markets. What was the biggest challenge for you in scaling? I mean, we have a lot of entrepreneurs here. Some of them just starting out their journey. They're seeing a company that was able to successfully break into multiple markets. What would you say were some of the key challenges for you in scaling?
Well, the biggest challenge across the board, not just for scaling, is people. At the end, this is a business that's about talent, it's about drive, it's about passion, and finding the right mix of people and the right team to work with is the biggest challenge. And when you're lucky enough to have that, then everything else becomes kind of an easier second step. Now, for us, the scaling issues, if you want to talk logistically and practically, it's one, cracking the kind of the administrative barrier of how do you go into a new market. So if you're going into the UAE, we started in 2006. Now, of course, the trigger was the war, and we were always kind of triggered by these kind of things. But the initial thing is, how do you figure out incorporation? How do you figure out licenses? How do you figure out the entire environment? And then comes business. How do you get business?
Did you jump into these new markets without a first customer?
Yeah. That's one thing. When you kind of have a feel of how the market should be, if you're waiting for, of course, ideally you'd love to have the customer, but if you're waiting for the customer to justify or to cover you as you try to capture that market, you might get lucky, but you also might miss out on a lot of opportunities. For me, it kind of made sense. We had a very good talent pool, we had a very good capability in Lebanon. Not going for the bigger markets was not good for business, even if you didn't have the clients. And then you'd be surprised how doing that move, that step, gets you the clients. You will get the clients.
It sounds almost magical. Can we have something slightly more concrete? How did you get your first client in these new markets? I mean, I can understand here you have your personal network, you have people you know, people connect you with other people, but you go into a new market completely. How do you start building that customer base?
Well, first, accept that you'll have a period that is kind of the investment period. So if you're not eager to immediately break even when it comes to a new market, when you're willing to lose money for 6 months, theoretically, then when you're in that market, you are socializing, you are in that space, you have a presence, you are exposed, and then you'll get business. So it does, maybe I'm positioning it as if it's magical, but there is an element of it that's logical. Just if you're there, you're willing, you're dedicated, you're invested, you might not get the ideal client, you might not get the best client, but you will get momentum.
Great. So one of the things that you mentioned already was the people component, right? You said the most key component of scaling was people. How did you keep your people incentivized? There's a lot of discussion that I hear between entrepreneurs, investors, that the CEOs or the founders of these companies don't give enough equity to their team members to incentivize them to be with them for the long haul. What did you do to keep your key staff with you? And if you could even share with us some percentage of equity that you dedicated for key people.
I'll address that. I think that incentivizing via equity is probably not the best way to put it. I think you need to build the right dynamic. And the right dynamic is definitely has to translate into equity, into a real involvement, into real partnership. But for me, the partnership started with the best people I work with, the people I'm lucky to work with. It didn't start by saying, this is the equity you get. It's getting to a point where you have partners by virtue of spending so much time with those people on a day in, day out basis. Now, having said that, that's pure talk. I made it clear from day one that I'm not building a family business, and I had no intention to be building a family business. I was in it for a challenge. And when you have that and you're working with people who share with you that challenge, automatically.
So what do you mean by it's not a family business? Like you didn't want to give positions to people you knew or to keep it?
No. I meant that I have no intention of turning this into kind of
an empire?
My own personal kind of
platform?
Brand or platform. I wanted to have that. I wanted to experiment. I want to enjoy the ride. And what happened was that a few years back, although I believe I had partners from day one, when I kind of parted with me and Maya, I decided that I need to deconstruct the business and to try to look at it from an angle of, yes, I want to partner up really with everybody. I want the team that worked with me to be really partners. And that's where I follow the model of saying, okay, there has to be a big chunk of the equity or a significant chunk of the equity owned by the people who are running the business. And when they are running the business, they are removing a big burden off my shoulder because they are the ones who are taking ownership and driving it.
So even if we don't say how much did you give them,
yes.
What is that magic number that you think is enough? How much should the entrepreneurs in the room dedicate to give their staff? Significant. You said significant.
I think they need to dedicate substantial amount, which is around 20%, let's say, minimum.
Okay, 20% minimum. We have a number.
But let me give you the way I'd look at it. It is not just a matter of a number, because 20% of nothing is worth nothing, and 5% or 1% of something substantial is worth a lot. But this is not about granting equity. It's about abdicating or removing, willing to move yourself out of that leadership job, willing to say, I am following your lead. I trust you to not trust you because you are probably better than me at so many of the things that we do daily. So you declare that through equity. It is not a function of equivalence when it comes to dollar value.
Great.
Sorry, I'm trying to be as...
I think that was very well said, right? It's about signifying to people their leadership position within the organization. Yeah. Great. So let's dive into the acquisition itself. How did it happen? Did you get a call from Roy from WPP Group saying, hey, we'd like to buy your business? Yes. Who approached who? Okay, great.
Simple as that. And frankly, at the time, we were growing and we were doing really well. And we were just kind of moving into this next level of growth. And the idea of saying, let's move into, go for this acquisition and so on, wasn't really the first thing on my mind. But the first conversation I had was, would there be a fast forward button in our conversation? And through 1, 2, 3, 10 conversations, I got to a real conclusion, a genuine conclusion. I know people will say, okay, yes, everybody says that, but a genuine conclusion that there would be a big fast forward button with doing that deal with JWT. And to date, I think that I'm seeing it firsthand, although it's been only a few months.
How long did the process take?
Wow, it took a good probably a year and a half, but not back and forth, because it's a normal courting process. It's back and forth. You go on a few dates, you then decide it's not working, and then you go back, and so it's just the normal kind of process. So it does take its fair share of time.
What were the key elements that you were looking for in this negotiation process? I mean, certainly valuation is one, but what should entrepreneurs be looking if they're approached to sell their business as key terms that they should be watching out for, that they should be careful about?
Well, one thing, careful is one thing, but let's talk about what they should look for.
Yes.
One, I don't think we should be looking for the exit. It is more about looking at the options for growth. So you have to look at the matrix in front of you and say, okay, if I'm doing what I'm doing today, let's do this kind of pre-mortem. Let's say, what will happen in a few years' time, and where would we like to be? And accordingly work in reverse. When you look at that, then you have automatically your exit options in front of you. And if the exit options indicate that you're better off getting a bigger platform or getting a bigger opportunity for creating or amplifying the value that you've already created, then it's the right kind of move. But I think there's also an important part in people realizing that they should design their business from day one for a theoretical exit. Not to exit, but for a theoretical exit. If you're designing that from day one, if you're you immediately delve into the financials, into properly structuring your books, properly structuring your org chart, appreciating the value of the boring stuff like IFRS, International Financial Reporting Standards, and so on. Once you familiarize yourself with that, you're in good shape no matter what. And then it becomes about personal choices, whether it makes sense or not.
So interesting. So here your advice would be really the paperwork, the part of it that is the accounting, the finance, the due diligence part of it. That is, if you want to have a plan of exit, you should really start getting involved in that early on.
I think regardless, even if you want a business, if you really want to have a business, you don't do that, you don't have a business. Whether you want to sell it or not.
Good. We're not going to talk about the valuation number, but can we talk about how far off were you when you started the negotiation? 50% off, 100% off each other?
When you don't have expectations, you can't be far off. We had no expectations on value because we were running a business at the time, and it's in a service company, in a service business, it's not like there's a metric that says that is the value of the property. You know how much you're making personally as partners. So you know you're making money. Then you decide how much, when you're looking at the transaction, you're designing the whole framework. You're not just looking at, I think it's worth X and they say it's worth half X. No, you're simply designing an overall framework. Sometimes we get locked on numbers, but numbers are not just that. Numbers are only a part of the deal. It's the whole process that matters. So I wouldn't say we were far off because, again, they came in with experience. We were there and we started listening. And when I say we, all of us, because it was a group effort. And we realized bit by bit that these are the things we want, these are the things we don't want. And progressively we converged into something that made everybody happy.
Okay. So I barely have time, but I want to ask two quick questions. So one, why sell? Digital is booming. Client demand is through the roof. Everybody wants to do stuff in digital. This is the time for Cleartag to grow into a major multinational conglomerate and rule the world.
And it will.
So, but you exited, or didn't you?
No.
I mean,
that's the beauty, I think, of what I found in this relationship. In that I found a counterpart that was very pragmatic. They understood what I was doing, what we were doing on the Cleartag front, what I was doing on the DNY Group front. They understood fully everything. It was full disclosure there. And we designed around that to address all the aspirations. So I'm still running Cleartag, and I still am very involved in it. And I do believe that today it has the best chances to grow to a real giant, not just in the region, even globally, because we are doing the right partnerships, the right alliances. We are working on we're pairing up with the Miram brand, which is a JWT brand. We're growing to a level that was not necessarily possible if you are purely independent. So we still can do everything that is possible in digital, but we also have the flexibility to pursue other directions also.
Great. I'll end with one final question, which is, what's next for Tarek? We know that you're less operationally involved on the day-to-day with Cleartag, or are you not?
No, I'm very operationally involved. I spend a very big chunk of my time. I still fill the CEO role, but I'm also the chairman of DNY Group.
What's the next thing for you now? I mean, a lot of people in Silicon Valley, we talk about the idea that an entrepreneur exits, they make some cash, then they go out and they become the investor in the next generation of startups. We see this with the PayPal Mafia, for example, right? What's your plan now that you've made this success story?
Well, I've been investing throughout, and I'm still investing. And through the DNY Group, now it's becoming more of a structured mechanism for investing, because I am channeling some of my effort, the team's effort into ventures that I think are worthwhile in products, in tech, in electronics, and so on. And this is an area I'm very passionate about. I will always be passionate about. I would never be able to let go of. So that is part of how I operate. So but I do not believe in being like a silent investor. I like to be very hands-on in anything I get involved in, especially things that have to do with hardware and software. So there's a lot on the DNY Group that I started doing, I will continue doing. But also on the Cleartag front, there's a lot that I'm getting even re-energized about, because I'm seeing how we're able to take that baby and turn it into a real solid impact player in the region and hopefully globally. And I'm seeing it hands-on, and it's a journey I don't want to miss out on. So I'm kind of greedy on both sides.
Well, we wish you the best of luck with that. I hope you're able to maintain your sanity while maintaining all of these jobs. And thank you very much.
Thank you. Thank you.
Thank you, guys.